We go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is NFP Live. Today, we're going to cover the Non-Farm Payrolls report for the month of June. We're already 6 months into the trading year, getting ready to roll into the second half of what has been an absolutely fascinating year to be in the markets. Hasn't really been a great year, but we're definitely chopping along. I talked to a lot of traders around the world. The concerns are all the same. Price action is choppy. News cycle's choppy. This has been a crazy year. Yes, it has. Q2, Q3, Q4. I think Q3 and Q4 are going to be a lot better than Q1 and Q2. Q1 was pretty good. Q2 was sort of a nightmare for a lot of people. That's okay. We're going to get on the right foot today. We've got a bunch of markets just right out before us. Big news out of Japan. US dollar, Japanese yen made the move. We talked a lot about the BOJ intervention over the last several weeks. That has happened, it looks like, or at least the rumors are out. A lot of people are trading the rumor. Maybe they'll trade the news as well. But we are going to look at NFP. We got the dollar CAD, 4-hour 920 EMA crossover setting up. Great Britain pound USD. Beautiful trade that we had just a few days ago that was absolutely fantastic. I want to show you that one as well on that 920 EMA crossover. We've got gold absolutely flatline. Had a question right there. US 30, do I buy it or do I sell it? I don't know. I don't know. I mean, this is really going to be a challenge here. We've seen a lot of flat markets right now. The dollar index is down about 0.25%. Indexes are flat. U.S. indexes are flat. Gold's flat, up a little bit. Let's see. Silver's up 1%. WTI crude's probably the biggest story in finance, down around $67 a barrel, beneath that gap area that we talked a lot about. All right, guys, we got a lot going on here, so let's go ahead and get to it. Remember, if you're not following us over on Switch Markets on YouTube, be sure to check it out. Each and every week, we put out a market analysis. We cover a lot of these markets. That comes out for your Tuesday London session. We've also got a bunch of shorts. You can catch our live streams there as well. So all of our new content, if you're following us on Forex Signals or How to Trade Calm on YouTube, be sure to get on over to the Switch Markets YouTube channel. Get up and running relatively quickly. Subscribe, follow, do whatever you want. Click the bell. I don't even really know how YouTube works. Just if you guys want to watch, head on over there too. We got a lot of content that's dropping all the time there, especially the shorts. A lot of shorts out lately. So good to see everybody out there in YouTube land. Nathan Adams, good to see Augusto. River Lay, good to see you, River. Been a while. Right on. Packham, good, always a pleasure. Packham, and let's see, legit 19 or 1095. Let's go. I hear you, Wizard Alvin, Janetti, Bobby Bob, over in the How to Trade community. Good to see the How to Trade traders out in force. Okay, guys, let's get to it. NFP, U.S. Bureau of Labor Statistics for Thursday, July 2nd. Why is it today and not tomorrow? Because it is going to be the 4th of July weekend here in the United States, Independence Day holiday, and it's the 250th anniversary of the United States. So I'll be out of the office tomorrow. No live streams tomorrow. I'm probably going to try to find maybe a barbecue and maybe a couple of cold ones. We'll see exactly how it goes tomorrow. But tomorrow, no live stream. They bumped NFP today because they know liquidity tomorrow is going to be really difficult to come by here in the United States. All right, trade update. Bitcoin bids from 58.5. Just briefly, this was a fantastic trade. We put this out a while ago. Long-term level, yearly level, right there at about 57.8. We wanted to buy 58.5s because it was a pretty good bargain in my view. My sentiment towards Bitcoin is changing dramatically. We trade beneath 58.5 or 57.8. We break down into this vicinity, this range, 39,000, 40,000. Could definitely be coming up, and you can see right here, beautiful bounce, pretty much pay it off, a couple of thousand pips right there. Really a nice level, and one that I had to highlight as we roll into this NFP. U.S. dollar, Japanese yen. We talked a lot about this pennant, beautiful daily pennant, sort of an ascending triangle there. If you want to go to your 4-hour chart, and we did get our break. There was sort of your ascending triangle right in front of 162. There was sort of your break. We pulled back to 162. Swift rally right up there to about 162.84. And then, well, the world pretty much ended for the yen. We knew something like this was going to happen potentially with the Bank of Japan. Our live streams, we covered it every single day. And what we have, look at the news. Japan shifts to ambush intervention tactics against yen short sellers. Japan sent $74 billion propping open the yen. BOJ's slow dovish revamp casts doubt over long-term rate hike plans. Newest Bank of Japan policymaker pledges to keep a careful eye on the yen. We knew the BOJ was going to get involved. We thought 162 was a hot level. It had been hot in the past. That was an area that I was hyper-focused on. 162, loved the breakout above it. We traded beneath it for a while, and now we really have to consider the fundamentals. I know we're technical traders. Everybody's scalping 5-minute charts, 1-minute charts. Believe me, the fundamentals are going to be the key for the Japanese yen moving forward into Q3 and Q4 this year. The BOJ, we knew they were going to say something. We knew they were going to say something, and all of a sudden, the rumor mill started, and what do you have here? You got a big sell-off right there of almost 1% in about the past, 5 hours? 8 hours, a little bit of a bounce there, but really a swift move during that U.S. overnight, which would have been sort of the mid-Japanese session. Amazing stuff. We're trading 160-152 right now. Are we going to be looking to trade maybe 160-195s? Maybe take the short again from 162? I kind of like it. I kind of like the short side. So if I was building this trade ahead of NFP, remember everything we do is via paper. We've got a whole bunch of trades. Do we have any out? Yeah. Well, unrealized. 22,000. That's hot. In any case, what we're going to look at doing right here is we're going to go to trade. I want my order. I want my limit. I want to sell limit order. Let's put this right up beneath 162. Let's go 161.92. Let's go ahead and get that in the queue and see if we can't get a fill perhaps on this NFP number. All right, we got 4 minutes to NFP. Let's go over a few of our expectations for this number. I think it's going to be fascinating. I think it's going to be a fascinating number. There's a lot of expectations. A lot of them are high. Some of them are not really grounded in reality. All right, here we go. Isaiah, awesome to be here. Let's make some good money today. I hear you. Let me see. XAUUSD to the moon or 6 foot to the grave? Blessings. The gold is doing nothing. Gold is chopping everybody up. It's absolutely chopping everybody up. Take a look at this. Take a look at this chart. Long-term chart. I get it. Monthly chart. I get it. Not really attractive to intraday traders, but understand 4,067. A lot of rotation right there. A lot of rotation. So let's take this down to a 5-minute chart. What's happening today? Nothing. I mean, look at this level right here is attracting two-way action, all right? So what do we have? Is it support or resistance? It's nothing. This is a consolidation area. We're going to wait for gold potentially to break, and then we'll look to trade it because right now it is in an absolute flat spin. It's what I call a flat spin when the market moves sideways. It just isn't good enough for me to trade. I want to see some disequilibrium of pricing, then we'll step up and get after it. Let me see, Dreze, signal please. Well, we have a trade on the board. I would love to sell right beneath 162 in the yen. USD going to US 30, going to crush. All right, let's go to the US 30 real quick, and then we'll get back to gold. I just don't see it. I really don't see it. We could pull it up on a short time frame, daily chart. I mean, it's tight, guys. It's tight. What would we want to do in a perfect world? I'd want to buy 50s, 50,000, big round numbers. This right here, to pick a side in a market that's sort of this quiet, you're going to run into trouble more than likely. Okay, we got about a minute and a half until the NFP number drops. Let's get you set and ready. NFP, remember, this is just the count of the jobs here in the United States. Don't make it too hard. We're going to be looking at the dollar CAD here because that one is going to be in play here very shortly. What we're expecting for today is 114,000. That's beneath the 172,000 previously. The unemployment rate is going to be holding steady, supposedly, at 4.3%. Personally, I believe that maybe these numbers aren't as accurate as they've once been. I don't know. I don't want to call anybody out for their calculations, but boy, we've seen some absolutely crazy jobs numbers this year. So NFP, definitely we're looking for a downtick, but still a relatively strong number considering the war. Now remember, if it's above expectations, it's going to be bullish for the US dollar. If NFP is below expectations, it's going to be bearish. For stocks and commodities, above expectations is bearish. Why? Thinking that the dollar's going to go up, stocks and commodities go down. That's simple. If it's below expectations, then we're thinking about rate cuts, kick the economy in the tail to get jobs up. What does that mean? It means a weaker dollar leads to a bullish scenario for equities and commodities. That really is all you need to know about NFP, unless you're a statistician or an economist. All right, guys, here we go. Let's go ahead and just take a look at the 1 minute gold chart. I'm interested right here. I really am. I'm interested. This number here, I don't love it. I don't think everything is tradable right now, but let's go ahead and wait and see. Okay, the number dropped, and there it goes. Okay, huge move right there. That's going to be what? It's going to be a weak. It's something weak for the U.S. dollar, so that number more than likely came in low. Look at this explosion from gold. Absolutely a huge 1 minute candle. You're seeing the market just rocket. I mean, we rocketed up about $40 an ounce right there. Absolutely huge volatility. Let's let that one simmer. Let's go back to our dollar yen. Didn't quite get it. Big reversal in the yen. We're not seeing much of anything. Okay, the dollar absolutely getting smashed right now. You can see that yen trade probably out off the board for us today. U.S. dollar, Canadian dollar. This was one we were watching a 4-hour crossover on the 920 EMA. It still may set up about 30 minutes left. Maybe towards the end of the stream we'll get back to that one. But the CAD is definitely in play right now. Great Britain Pound USD, beautiful crossover trade earlier this week. We hit our take profit going away, and now we see the big pullback and now the rally. I don't know, guys. It looks like the dollar's going to take this one on the chin. Let's get back to gold here. Gold still taking off a minute after. What was the number? Let me see. Can you zoom in a bit on your screen, on the chart a bit? Nah, that's about all I got for you, Darko. My bad. We'll do better next time, I promise. Riverlay, I wonder how close or far from the revised number it will be. Well, this is fascinating. Let's go ahead and take a look at it. What I'm looking at right now, that's tough for me to lay off of. We got to get in there. We got to get an order in there. Macro level, I don't like it, but I do like the price action, a potential overreaction. If we get back down into this zone, we have an absolutely great chance to grab some rotation. Remember, ignore my leverage. My leverage is demo leverage. It's not going to be your leverage. Let's go right there from 70. Let's put that buy limit order right down in the queue. Now you can see what we're betting on here. We're betting that we get a retracement and fill in to this level right here, fill in this NFP bar, and then we come right back down. Okay, MSRE, what is the number? All right, let's have a look. Let's take a look at the actual number. The employment situation for June 2026. Both total non-farm payroll employment plus 57,000 and the unemployment rate changed little in June. The U.S. Bureau of Labor Statistics reported today. Employment continued to trend up in professional and business services, social assistance, and healthcare. Leisure and hospitality lost jobs. See, I can barely speak English. That's for sure. All right, 57,000. What was that? It was a bad downside miss. It was a bad downside miss. Let's go right back over here. You can see we're looking for about 114,000. Didn't get it. Now, one of the highlights was the unemployment rate did shrink to 4.2% from 4.3%. So that is the formal report. And one of these days, I'll get good at pushing buttons. It's early here in Dillon, Montana. Remember, money never sleeps. But I'll tell you what, sometimes you get a little bit groggy when you're up at about 4:30 in the morning. That's for sure. All right, so non-farm payroll employment missed expectations badly to the downside. Unemployment rate 4.2%. Now, here's the key. Here's the key to reading these reports. Before we tune out and we go do some scalping and make some money and all that jazz, the last paragraph, the devil is always in the details. The devil is always in the details. The last paragraph tells us a lot about what exactly is going on in this jobs market. This is where they post the revisions. The revisions are absolutely huge. The change in total non-farm employment from April was revised down by 31,000 from 179 to 148. And the change for May was revised down by 43,000 from 172,000 to 129. With these revisions, employment in April and May combined is 74,000 lower than previously reported. So there you have it. So it's starting to look pretty rosy over the spring. We had a series of pretty strong numbers. Those weren't accurate. I mean, those are big-time revisions. I was really hard on the Biden administration for always posting revisions. Well, there it is. Good night, Wizard Alvin. Thanks for joining us, Wizard. You can see right there that the revisions are down, are absolutely staggering. You're down about, 74,000? 74,000. So how bad are these guys missing? 31,000 out of 179. What are you missing by about 15, 20%? That's a bad miss. So the employment situation wasn't as good as we thought. Now what? Well, our number today missed expectations. So all of a sudden, the jobs market doesn't look as rosy as it once did, probably about a half hour ago. So we're going to get back to that. I want to see what some of the headlines that come out. I can almost guarantee you that they are going to be seriously negative. And this right here sort of bodes poorly for the U.S. dollar. The U.S. dollar will lose some puff just because you have a situation where you're starting to think about, are we going to get some rate hikes? Are we going to get rate cuts or rate hikes? More than likely, we're going to get rate hikes because of the situation in Iran, and we'll talk more about that towards the end of the stream. But for right this minute, our focus needs to be very simply on what do we trade? Do we trade against the dollar or for the dollar? Right now, you want to trade against the dollar. You definitely want to do that. So U.S. dollar, Japanese yen, there's our 1-minute chart. What could we do as a trade right here? Okay, this trade's gone. In a perfect world, we would have got 162 sells. Now the market's fallen away. What do we want to do? Well, there's a couple things we can do. We can go to a 1-minute chart here. The market's plenty active. We could throw some Fibonacci's on. Potentially look to get a 38% sell right up there, right around 161. I love it. I think that would be a fantastic sell. I wouldn't have any problem taking it. Are we going to get it? Well, I mean, maybe we get it, maybe we don't get it. That would be probably a tough trade to get right now. We're up there at about, another almost 20 pips, something like that. 20 pips from here. Do we get that? Probably not. Not right now. So we're going to be watching that closely. Good level, though. Our dollar CAD's starting to fall away again. This could be really a premium sell as we roll into the weekend. But what I would say is this WTI crude oil sort of got me spooked. Crude coming off in a big, big way. That's going to derail your U.S. dollar, Canadian dollar, no question about it. Great Britain pound USD pulled right back to that 9 EMA and has absolutely exploded to the top side. So right now we're looking to bet against the U.S. dollar. How can we do that with, say, gold? I don't believe we're going to get our level now. Probably not until later in the session if we get it at all. So now what do? A couple of things we can do. Number one, we can certainly back this off to, say, a 5-minute chart and start looking just to bid our NFP level. We can certainly do that. We can go back down to our 1-minute chart and attempt to be aggressive. We still have a nice range here. I would start my Fibonacci's if I was looking for a level. I would start it right at the bottom of NFP, right there, and then right up to your current swing high, wherever that may be. So right here, I mean, we're still about $20 off of our entry point, about 41. We could look to buy maybe 41.10s and see if we can get in there and make a little bit of money. But I have to tell you that realistically, this could be a real challenge to get in on this trend. We're going to have to see a significant move to the downside, and I'm just not sure that we get it. So there's a couple other ways we can look to trade the action while it is happening. We always lean on the 9 EMA strategy here. It's a pretty good strategy. If you're not familiar with it, head on over to Switch Markets. Check out the strategy pack. It's got everything: PDFs, instructional videos, a custom EA that you can have on the house free. I built it. It works. We just got to make sure that we apply the strategy correctly. 5-minute chart, U.S. Tech. U.S. Tech, that's a U.S. 100. That's the NASDAQ. What are we thinking with regards to a potential trade here? I kind of want to get with the trend. Now, this trading idea, this trading strategy is going to set you up potentially for a sell later in the session. I wouldn't necessarily mind that. But I'm not interested in selling right now. And the reason why is because the dollar's getting lambasted. It's getting lambasted because that NFP number was brutal. So let's say we wanted to see if we could find a level potentially on that U.S. Tech. Let's take this to the NAS 100. You can see our key number right there, 30. We're butting up against 30 right now. I think that if we could get a 30,000 buy, maybe on a pullback, that could be absolutely fantastic. There it is setting up for us. Do we want it? We could get it. We can get that bid right now. There's your 1-minute pullback. Should we take it? Risky trade? Little bit. Market order? Let's buy it. Let's send them and see what happens. Okay, so there's our bid. What kind of trade location did we get? Great illustration of what happens when you send a market order. Look at our trade. Look at our trade location. Now, when we bid, price was down here. What happened to that? The spread. The spread got us. Remember, when you're in an OTC market, you have to deal with spreads. Spreads are tough to overcome, especially when you're using market orders. Market orders, when sent to the market, filled at the best available price instantly. Now, in this instance, we were in pretty good shape. The spread really hurt us. We should have been filled down in here, right around 30,008, maybe 30,000 even. That would have been a much better trade. Right now, our trade location's not great. Still may work. We still may have a profitable trade here, but it's still not that great. If you're going to scalp things like 1-minute charts, key levels, precision matters. So right now, I really don't mind holding the longs, but my trade location's brutal. It's not very good. Right down in here, very confident we get a bounce. Do we still get a bounce from up here? Potentially. What makes this worth our while? Something right up in there. 30,000, maybe 33. Very tight scalp. Where would I have to get out of this trade at? I'd be watching this one like a hawk. If it breaks down against us, and it looks like it may, then we just got to pull the Band-Aid off and get out. But right now, pretty good trade location. Not bad. Let's see if we get up and fill. So, okay, right there. Great lesson number 2. We got a garbage fill on our entry, and then price hits our take profit, and we don't get filled until later on. Profitable trade, yes. Sloppy trading, 100%. Look at what's happening now. We were fortunate. We were conservative with our profit target. We got in, we got out, we hit it. That's it. What do you want to do now? Do you want to trade it again? If we trade it again, the better idea is to go limit order down there at 30. Buy, order, limit. Put that right down there at 30,000. Right there. And that's where you want to get your bump from. So even though this was fantastic, we got paid off. All right, that's great. The trade location was garbage. I didn't like that, especially for a 1-minute scalp. You cannot afford to do that. But we got lucky, right? Well, I don't know. It's funny. We get lucky a lot. Here you go. Fibonacci. Can the Fibonacci's help you right here? Nah. Where would we look to get out at here from 30? 30,000 buy. Key number. There it is. Where do we have to pull the plug at? 1-minute chart. Right down there. 29,993. We have to see exactly what happens with price action. Might take profit. Probably be right up in there somewhere. Interesting trade. Let's see if we get it right here. We should get it. Okay, right there. Touched us. Okay, we're long. Price going against us, hitting that 30 level. A lot of compression here. Now we've got to be very careful with what we do. Are we going to scratch this thing? Let's give it one more second. How much longer in this 1-minute bar? We've got 10.98, 7.65. You can see our trade not doing very well. I want to see what happens at that 62% level. We're pretty much gone. Okay, right now I know where I'm gone. I'm gone right down there beneath that 1-minute bar. Now we're getting a bit of a bounce. Bounce back up to 62. How does it look? Are we going to get the return to 30,000? That's what we need. This trade right now is very, very shaky. Okay, there's the bounce we're looking for. We're back to break even. Let's see what we can do. Right now, you have to know where your stop loss goes. Boom, right there. There's your loss. That's your protection. In order to make this worthwhile, you're going to need to get a bit of a bigger move. It's got to look something like this, essentially. That's a 1-to-1. That's a basic 1-to-1 scalp. Now, what's happening at 30,000? Yeah, we're catching some bids, but the market's consolidating. Now, when the market consolidates, I get chills up my spine. It's not a very good look. I want to see a break. See, right back down to 30,000. We could be in trouble here. Now, the good news is we've got our protection. We've protected the trade. Was it a little bit more than I wanted to spend here? Yeah, probably. But remember, 1 to 3% on a given trade, especially if you're scalping 1-minute charts. Are we still in the trade? How do we feel about it right now? Be thinking this stuff. This is all trade management stuff. This is game on, man. You've got to be there mentally. If you're scalping something like NFP on short time frames, you've got to be there. I'm starting to really hate it. Realistically, I'm starting to really hate it. But we've taken the draw. We've already committed our capital. Let's wait and see how this thing pans out. Now, most traders online that you're going to see, they're going to do stuff like this. They're going to put that up there, and they're going to say, listen, that's a 4-to-1 or a 3.5-to-1 payoff. We don't have to hit this very often, so if I lose, it's no big deal. We're not doing that. We're scalping right now. I want to get paid off right there on a 1-to-1, which is still a little bit big, but we're getting consolidation right around that 30 level. If we catch bids around 30, we should be home. Price action, okay, now we're starting to go our way. Now this thing's starting to look good. What do we do now? What do I do now? Do I get out? Do I take the money? Well, we already hit one trade. You probably could pull the Band-Aid off and just rip this off and go home for the day, not trade anymore. You could do that. Is it sound? Not really. Why? We took the initial draw. We took the commitment. Now we either get paid off or we don't. That's the way I look at it. If we take the loss, we take the loss. It's part of doing business. However, I still like this 30. I still like the bidders. They're there. But realistically, this market's going to break one way or the other. I know that if we get touched down there, I don't want any part of this. I want out. I want out right now. But we're getting compression. We're getting compression right around 30. When does this thing need to cash by? I'd say if it doesn't cash in the next 2 minutes, we're probably in trouble. That's what I would say. Right now, though, the compression, you can see, okay, there's the break. Now you're starting to see the break. Look at this bearish pennant setup right there. Nice big move. Nice compression right around 30. Are we out? We're pretty close. We're on life support. I mean, we're having trouble breathing right now. We going to get nailed? Nailed. Out. Pull it. You don't want any more of it. There's your compression right there. We had a really nice break right here. I thought we were going to get filled up. Now the market rotates back up to 30,000. A bit of advice. Once you pull the Band-Aid off at your stop loss, once you pull it off, get out. Just leave it alone. Look at gold. Look at anything else, right? Pretty good trade, though. I mean, we could have taken the 800 profit, but when you take that initial risk, you need to be able to commit to it. That's the way I look at it. So one winner, one loser there. We'll see exactly how we do. That's for sure. MS, you're good. Take the profit. No, we just laugh out loud now, short it. Let me see. Hanan, when can we sell gold? Well, theoretically, you could sell gold right now. Put your back up against this top right here, 41.40. You could do that. The problem you're going to run into is you are going to be fighting probably what's going to be a potential trend day for gold. So you're looking at what, you're looking at 2.5% on the gold market. So that would be tough. I would rather be on the buy side of this market today just because of the fundamentals. But as far as, what could we do from a big picture? If you were interested in selling gold, well, I mean, you can see how dirty price action's been for about the last week. Well, let's go ahead and see what we've got here. Weekly chart, sort of have a spike right there. Not real great. I mean, I don't want any part of this, guys. To be honest with you, the market structure is really not good. It's ugly. It's a little bit cleaner on the monthly, but then again, these levels more than likely are going to be way off in the distance. So I mean, I could tell you to sell like 4,500s. That doesn't help you today. So I would be looking at this going, what do I do with it? Maybe reference a different strategy, 920 EMA. We can go ahead and throw that on gold. You can see, okay, there it is, 4-hour chart. Gold's breaking to the top side on the 920. This was a spectacular trade. 4-hour time frame, got helped out by the news. The news went your way, so you got paid off right there. But what do you do right now? As far as selling goes, I mean, I would probably take this 920 maybe down to a 30-minute, maybe a 5-minute, just looking for any clue. I mean, it just says buy. So that's essentially what you're looking at. You're sort of on the buy side here, guys. You're sort of on the buy side. Take a look at that. Sell, buy, sell. That's why you don't trade right before something like a big NFP release, right? Okay, so what do we have on gold right now? Well, we have an interesting level coming up. I mean, we could certainly step up and scalp this thing if we want. 5-minute Fibonacci's, 41.11, something like that. Get our paper trader going. Remember, everything I do is paper trading, especially on live stream. Don't do a whole lot of paper trading in real life. But everything on these live streams is paper trading, and that has to do with a lot of regulators out there. So if you're watching and you're a regulator, it's fake money. Don't mind my leverage. We're not doing the big leverage to be attractive. It's just let's just see how we manage the money. I personally, on demo, I like looking at big numbers. It's about the only thing that'll interest me on demo. But when you're trading in real life, 1 to 3% on one trade any given time. I'll look the other way if you want to trade 5%. I'll look the other way there. So what would this trade look like? I said, well, man, you got a really good level here. You got a nice big break on that NFP. You've got this situation right up in here sort of setting up as a bit of a top. I mean, I guess if you wanted to trade this to the short, maybe. We'll take a look at our 9 EMA here in a second. But for me, this is going to be relatively straightforward. We're just looking for a bounce. Maybe buy 12, sell 17s. Just looking for a bounce. And the reason why we would even look for a bounce there is because you have really strong fundamentals today. That was a weak NFP number. We'll look at some of the media coverage in a minute. That was a weak NFP number. And when you have a weak NFP number, it's going to hurt the dollar, right? When it hurts the dollar, what happens to gold? What happens to stocks? Interesting stuff. We'll see if we get the pullback there. Let's go back out to our 9 EMA. This is U.S. Tech. You can see U.S. Tech is setting up for that sell. I don't know about that. We'll see. Gold. Let's go ahead and go to gold. Gold, 5-minute chart. Okay. Essentially, this is the same type of situation. You asked me a question. When would I sell? When would I potentially sell? Probably after I got like a 5-minute close beneath this 9 EMA. I would consider it then, but I have to tell you, even fighting, it's not really a trend because you got the big move right away, but that could be a real challenge for you, waiting around all day to get the end of the trade and potentially still be fighting like a 2% gain for gold. Fighting trends with the 9 EMA is hazardous to your health. No question about it. So you got to watch that, definitely. You can see right here, okay, we're coming into range. I would love this tight scalp from about 41.12. What's our entry? 41.1250. And those are ballparks. The reason why it's a ballpark is you can't go right at 41.11.49. It won't work. You got to shade it a little bit to the top side. I do that because I'm aggressive. I'm an aggressive trader, but you definitely can see that we're gonna have trouble getting a pullback here in gold. So be careful if you're gonna sell it. All right. That would be how I look at it on gold, Isaiah. I mean, if you're going to hold a position, I would probably hold a long one. However, I mean, if you want to hold that 5-minute, there's the 5-minute signal, 920 EMA crossover. If you want it, there it is. My point is this: stop yourself out down here and understand one other fundamental of these news. One other fundamental, I'm not going to say that, but one other thing that happens a lot during these news events, this is what we call a thin chain. That means there was a heck of a lot more bidders than sellers there. This area right in here, I call it highly suspect or sus. That level sus. We haven't done much business at all in this chain. And the problem with that is we could easily go down and fill it in. I won't call it a gap in the market because it is not a gap in the market. Those price points were traded, but it was a very, very thin chain because nobody was on the sell side in gold right after that NFP number dropped. So the bidders completely won. I do believe that probably you debate this level potentially, but it's really a challenge to start saying, okay, I want to just go long on our 920 EMA crossover from here. I want to see a little bit better. I want to see something better. I want to see a better entry. I don't have a problem going long here. If we're going to make our mistake, we're going to do it to the long side. But is it a good idea just to take a long willy-nilly? No, it's not. You got to wait for your levels. Let's get back on over to that NASDAQ we just lost a trade on. Well, there you go. You don't want any part of this. Why? Same type of principle. There was your big news bar. We're coming back down. Where did we cut this one off at? Cut it off what? Right there? Came back up to break even a couple times. We cut it off right there. It was probably a pretty good move. All right, let's go back to our gold. Let's see, where's gold at? Yeah, we'll see if we even get this one. Okay, we got a bunch of questions over here in the live chat. I'll go ahead and address those while we're waiting for some of these trades to simmer. Let me see. Edit Master, do you think silver can reach 70 today? Today? One thing I'll show you too, we missed it. There's your US dollar Japanese yen 1 minute scalp selling 160.97s right down to 87s. That's a beautiful thing. We missed it because I was too busy messing around with the US 100 and gold. Remember, pick a few markets and get good at them and focus on them. This trade right here could have made your day. Boom, nice big move, selling right beneath 161. That trade infinitely stronger than probably what we're trying to do over there on gold. That's a very strong one. Why? Key level 161, big round number, coincides with a 38% retracement, active market, trending market. Yes, and yes. That checks all of my boxes. All right, let's see. Do I think that silver can reach 70 today? Well, I mean, it's on the right foot, right? You're down there right around 59. Nice big break right there. And now you've got sort of a pennant forming here on the 1 minute. Can it reach 70? I mean, that's sort of the $1 million question. What are the lottery numbers tonight? I genuinely couldn't tell you. I think the odds are against it. I really do. And the reason why I would say that, let's back off to maybe a weekly chart. Let's see, what do I have here? Or this would be a long-term monthly chart. Let's go to a monthly. I know I'm moving fast, guys. If I confuse you, I apologize. But when we get going, things get fast and furious. We move quickly. Support zone was down here. That was the one I wanted. Talked about that in the weekly update. That one that comes out on Switch Markets on YouTube. 50 was my kill zone. Still is. You're only off about $10. If NFP goes the other way and it comes in really strong, then we would have had a shot potentially to buy 50s and we would have walked away with probably some significant capital. Now, 62%. This area held up as decent downside support, long-term level. So remember that, 64, 63.97. So let's take this down to, say, a 30-minute chart and have a good look at what's happening here price action-wise over, say, about the past week. This area was absolutely rocking, fantastic support. Went down there, just bounced, and then came down and bounced, and then we finally broke through that level and then really fell away. And now what do we have? We've got a market with a fundamental that says you're going to go ahead and rally. Weaker dollar, right? Weaker dollar means silver's going to get a bump. Well, where would this bump in? If we're calling for 70, and I don't hate your idea. I mean, if you like 70s in silver, you're bullish silver, take it. Take the trade. For me, there's going to be a fight at 64. No question in my mind. 64 right there. Potentially that could be a great intraday selling location if we get that high. That would be sort of a scalp looking just for a few bucks there, similar to what we're trying to do in gold right now. But that could be pretty good. That could be pretty good to the downside. I would say that for today, silver going to 70 is sort of a long shot, but the major battleground and sort of where you could really run into a speed bump or some real trouble is right there at 64. Right there at 64 could definitely be a bump in the road. That's for sure. Let me see. Yeah, there you go, Edit. I just talked about silver. There you go. Julius Caesar in the house. Fantastic. So no, to answer your question, I don't believe silver reaches 70 today, but it may. One other thing. That's why you have stop losses, guys. That right there is why you have stop losses. We knew when we didn't get paid off in the first couple of minutes there, that was a dead duck. First loss is your best loss. Don't ever forget that. All right, let's see. Will it go up? Because I just closed my positions. If you just closed your positions, Julius, don't worry about it. Once you close, the trade's over. On to the next one. Foxy Cat, Euro USD. I say okay. Euro USD. A lot going on in the Euro USD. Definitely a big banger. This would be a real similar trade that I would be looking to put on that yen. So the way that I would do it is back this thing off. We're up around 114.50, somewhere in that zone. And this would be sort of really routine. You go right down there. You're looking to work right from that NFP level there. And your bid would be right there about 114.45. That would be the bid. That would be the scalp. So if you're interested, somewhere right in this zone. Right in that zone would be the buy limit order. All right, looks like gold's coming our way. Let's go ahead and see about executing that. But that's what the Euro USD would look like. We're starting to see the big fill in. Let's see if we get a bounce. Let's see if we get a bounce in this gold trade. Now, listen, we're not going to wait around. This has to happen faster. It's not going to happen at all for us. So right here, 5-minute chart, really beautiful symmetry. But if this market breaks and starts to fill in this news bar, we are out. We're not playing around. Not playing around. So right now, you're starting to get that rounded top formation. 5-minute chart here in gold. Our entry point is right around. We should have probably already been filled. We haven't been filled yet, 112.54. The reason why we haven't been filled is that damn spread. Spreads in spot gold can be very, very large. They can be big. That's one of the reasons here in the States where I trade gold futures typically. But you can see what's happening right here. We're sort of tap dancing around our entry point and haven't really gotten filled yet. And that can be frustrating when you're in OTC markets. When you're trading over-the-counter markets, that is one of the biggest things you're going to deal with, fills and spreads, especially if you're trying to scalp. That's just the reality of it. So when you're scalping something, is gold the best scalp out there? Probably not. The spread's too big. Euro USD, pretty good scalp. Not bad. See, right now, we should probably almost be out of this trade, but we didn't get filled. Look. Where's our order at? We should have been filled. We didn't get filled. What do we do now? Rule of thumb I usually have. A couple of ways to do it. Number one, you could just drag this right down here and go right on the 38% if you still like the trade, or you can pull it. Usually, if I get tested and bounces right up and I don't get filled to my profit target, I pull it. The psychology of taking a loss when you should have won can be too much to handle. Right there, we probably should have taken a win again. Scalping, guys. Everybody wants to scalp, but do you really understand what scalping is? What do you do mentally right now? That trade's over. We already won it, yet we don't have any money to show for it. Good rule of thumb, scratch it. We'll get down here. We'll take a different trade. I'll say, oh, yeah, you won't give me that, huh? Well, I'm going to go down here. How about this? I'm going to sit right down here, right at 4,095. I'm going to play my 62% level. Buy limit order. If you won't give me this, then I'm going to take this. But what I'm not going to do is I'm not going to get left out of this money right here and then end up taking a loss on the second or third time through. Remember, everything with horizontal support and resistance levels has to do with liquidity. Right now, we're looking at buy-side liquidity. That's what we're looking at. We want the bidders to win this battle from our line in the sand. Remember, every time you go down and test that, you eat up some of that buy-side liquidity. We should have got paid. We didn't get paid. Welcome to active trading. Welcome to scalping. Frustrating. Beyond frustrating. That's why if you're going to do this for a living, keep your head. Keep your head. Fine. You don't want to let me into that party? I'll go to a different party. A lot of parties out there, guys. There's a lot of parties. There's a lot of bars. There's a lot of parties. They wouldn't let us in. All right, fine. We'll go find somebody that will let us in. Something to think about there. All right. We've got a lot A lot of questions here. Euro USD, yeah, Foxy, we've still got that level at about 114.45. I'm stuck at 66. Now, silver is trading 61.50, so maybe refresh your chart. You're welcome, Edit. Let me see. River Leg. Good to see a river. The job numbers after revisions from 2025 seem really low. And assuming a revision of 57,000, is it a new normal structural problem? 100%. 100%. When we were looking over the past, 4 years before Trump got in there, we watched the Biden administration cook the books. They cooked them. They didn't have to cook them at first because the jobs did come back after COVID. So like the first 2 years of the administration, the jobs numbers didn't look too bad. And then you got into the second 2 years, clearly they were being cooked. You would see the initial prints were large, consistently large, and the revisions were downward significantly almost every time. Now, what we ran into with the Trump administration this last year, to 2025, they came in, they fired everybody at the BLS, they brought in fresh bean counters, and then they also shut the government down. Remember that? They shut the government down and didn't even report these numbers for 2 or 3 months. So, structural problem, yeah, I believe so, and I think you're going to see more of that type of theme, River, come out with the Fed and what the Fed says. Kevin Warsh, they're going to look at the data sets and go, can we even believe these? Can we even believe these? It's a good question. I think the goal of pretty much any administration is to make sure that the numbers look good. And so they figure, well, we can put out a group of strong numbers. It's better to revise them later. It's the old thing. I said I would rather beg for forgiveness than ask for permission. It's one of those things. Oh, we missed again. You guys miss every time. I mean, they miss every time. So is it an easy job counting jobs in the United States? Probably not. Probably not. But I can see the motivation to make sure those prints look good out of the gate. And then they revise them down. That's a big downward revisions. There's no question about it. So that's a great question, River. I do believe it's systemic. I think it's structural. I think that there's no excuse. We live in the era of AI. I mean, you're making digital payments all over the world. All this technology. We can't count jobs. We can't nail jobs down. I don't believe that. I refuse to believe that. Let me see. Amon, Bitcoin, pump or dump? Well, I mean, we had Bitcoin. We had Bitcoin, the trade that we started off today's stream with. I gave you the trade update. Really a beautiful thing. I mean, you go back to, I know you guys don't want to look at yearly charts, but you really have to. You have to look at some of these levels because they're hugely important. There was our trade. That was the trade that we put on Bitcoin. We knew 57.8s. We bought 58.5s, and now we're up at about 61.5s. That's what we were looking for, 3,000 pips. You can see the money's in the bank. Go ahead and close the position. That's done. Do we go from here? Where do we go from here in Bitcoin? I don't know. I knew we were going to get a bounce off of that. And you say something. You suspected we would get a bounce from that. That's a great example of buy-side liquidity. Make no mistake, come on. Make no mistake. This is the last stand for Bitcoin. I mean that. 57.8, big deal. 62% level of this yearly just huge uptrend all the way up to 126. The rule of thumb is this: above 38%, your trend is strong. Above 62%, it is still technically valid. Once you fall beneath 62%, then we're talking rotation, we're talking 50,000, we're talking reevaluation of the entire thing. We talked a lot about the potential. Well, I mean, we talked a lot about the election that's coming in November. I've talked about that all week. Put out a few shorts on a couple of our channels on that. And the bottom line is this. Right now, the Democrats are favored to win the House of Representatives, about an 80% chance. If they win the House of Representatives, they launch impeachment proceedings against Trump on day one. They also can launch impeachment proceedings against a lot of people, anyone in the cabinet. I expect all of them to get impeached. Now, it doesn't mean that they have to leave office, but what it does mean is the favorable crypto treatment of the Trump administration. We want to be number one in crypto, Bitcoin. The U.S. government stockpiling Bitcoin. All of a sudden, the regulations on the crypto industry get pulled way back. That all can change. That all can change in a big way. And in my view, if you start talking about a bearish market driver for Bitcoin and maybe the rest of crypto, it could be government regulation. Democrats want to regulate it. They won't be able to. It's just the House of Representatives. But after 2028, if they win that election, potentially, you could see big changes coming to crypto. in my view, that's really it's a downer for Bitcoin. Don't really care what Kathy Wood says. Bitcoin's going to 3 million. When? 2050? When? All right, here we go. I hope that answers your question, Amon. Let's see. Julius Caesar. So the thing is 57,000 is bullish, isn't it? But the quote fell from 4.3 to 4.2, which is inconsistent. Yeah, don't get too confused about the unemployment rate. Very different. Very, very different than really what we're talking about with regards to the job count. The job count is typically what has a little bit more sway. Now, for me, the unemployment rate is more important because once you're above 4%, you're really testing the Fed's guts. The Fed wants it beneath 4%. 4%, they'll accept 4% unemployment. Above 4%, they feel like they've got to promote job growth in some fashion. So while it is, you're right. I mean, there was decent job growth here. You did see unemployment fall. You're still going to say that this is sort of a dovish or a bearish number for the USD because the jobs numbers missed so badly. They missed badly. We were looking for 114. We got 57. We got half of what we wanted, right? So that's no good. That means that the market was expecting more job growth. And you also have to remember all of the things that are tentative out there. All of the market drivers. Everybody's worried about inflation. Everybody's worried about the Iran war. Everybody's really worried about all that stuff. So when you start seeing a jobs number that maybe isn't where it should be, that sentiment, that negative sentiment permeates throughout the entire market. So you definitely want to be aware that downside misses in this type of environment are going to hurt. The dollar making a little bit of a comeback now, but still down about 0.63% on the day. So definitely bearish. Definitely bearish. So it's not bullish, it's bearish. That's what I would say. And as far as the unemployment rate goes, there's an old saying, I mean, these statisticians are magicians. I don't know how they got 4.2%. Theoretically, you had positive job growth, even though we revised the jobs way down over the past 3 months. The positive job growth was there. Maybe that decreased your unemployment. Things last fall and winter weren't good. So we could say maybe it's an improvement, but it's a moderate improvement at best. Bobby Bob over in the How to Trade community. Coach, according to today's news, do we say the dollar is weak? Yes. I would say the dollar is weak temporarily. And the reason why is we know Kevin Warsh. We'll look at our interest rate expectations in a minute, but we know that Kevin Warsh is definitely panning out to be a hawk, at least in year one. And also the Iran war. A lot of folks believe that the Iran war is going to continue after the election. I tend to agree with them. Let's see, FedWatch, 27 days till the next Fed meeting. You can see 82% chance that we're going to be holding firm, maybe a rate hike, about 20%. So this stuff's already baked into the cake. These rate hikes that we're supposed to get this year already sort of baked into the cake. It's going to take a jobs number that's a heck of a lot worse than this to really shake us off of these expectations. But I would say in the short term, this is going to be bearish for the dollar. So is the dollar weak? No, it's not weak. It's not weak, but this is a bit of a pullback for sure. You see, this is the end of the year, December. We're looking at 3.75 to 4.0, 4.04, 4.25, 4.5, 3.5, 3.75 is where we're at right now. You're seeing about a 75% chance of at least a 25 basis point rate hike. Interesting. All right, our Euro USD trade just went live. This one's probably going to take a little bit of time to unravel. Take profit. Yeah, probably put it right up in there. Maybe 56, looking for a cool 10 pips. We'll go ahead and wait. As far as your price action, where would you have to bail out at? Probably set this one up as like a 1-to-1 trade. This will take a while, though. It is the Forex. Forex doesn't move quite as hard and fast as, say, gold or crude oil or even your indices. That's for sure. All right, let me see. Edit Master, do you think when the American market will open, the gold should push to 4,200 because NFP turned out to be bad for the dollar? My point is, should we see a good move when the American market's open? As far as gold goes, gold's sort of a 24-hour commodity. I typically see gold as being a mover and a shaker from about 8 a.m. Eastern. You start to see the influx of volume. The best thing I could say to you right now is from a let's just take this right down. Let's go 30-minute chart. Gold futures. So what we would be looking at here, get rid of all of our stuff here. So what we're looking at here is our volumes, right? So our volume kicked, even though that's not a very big bump at about 8 a.m., it was a decent kick. It was about like what we saw in the pre-London Open, sort of flat volumes overnight. This is gold futures. And then you got a bit of a kick right there. Then you got the big kick for NFP. So what's likely to happen here in the next 20 minutes? Of course, you see volumes die way down. They die way down, and then they'll probably pick up a little bit on that open. So it's sort of your guess is as good as mine which way the market's going to move on the U.S. Open for gold. I mean, to me, with that kind of fundamental, you probably would be pointing towards the long side of gold in a rally. But the idea that we would push to 4,200 from about 4,120, so you're saying would we rally about $80? That's a big move. That's a big move. I would be cautious about that. I would be cautious about that. Now, if you wanted to buy gold right now and hold it into the U.S. Open, and maybe you get a bump and maybe you don't, I really don't have a problem with it. You just have to really know, sort of what you're getting into. If you want to take that trade, then you just buy it right now. Realistically, you just play this 5-minute 920 EMA crossover. You buy it now and stop yourself out underneath 4,064. Once again, that's a big trade. So if you're looking to get 42s and you want to risk, $60 something, which is a ton of pips, you got to dial your leverage way down to make that trade. I don't know. I think that's a really big move. I would call that a high risk proposition, but it certainly is possible. If you like it, take it at it. That's what I say. All right, Julius. So the 4.2 is inconsistent, isn't it? Yeah, I mean the 4.2% is a little bit lower than what you'd think with the downside miss. But the argument would be, well, we've seen not significant, but we've seen positive job growth. Really, since February? Potentially that could have dug into that unemployment number. Maybe. Or they just lied. Governments wouldn't lie, would they? Sure they would. They would lie. It's possible. That's for sure. The NAS is coming down. That is why we pulled the plug on that ugly trade, Packham. We should have won that, but that thing's cratering. So maybe that's a leading indicator. I don't know. Let's go back over our Euro USD trade. Looking pretty good. Nice little bump there off of that 38%. Disappointed we didn't get our gold fill. That was sad. We should have got that trade. As far as the NASDAQ goes, that was a good move pulling the plug when we did, unless you're just going down the tubes, and that's no good. That's no good. Let me see. Alexis, good to see Alexis. Welcome. Great advice on leaving the trade that won't let you in. I do that all the time with only trading 2 or 3 pairs. I think that's the way to do it. It's frustrating, and it is really hard to do, especially if you're sitting there and you're waiting all day for maybe one of your key levels to come into play, and you get hit and you don't get filled, and it goes up and gets its money. They won't let us in. We have to go do something else. But to stay there and attempt to get that trade after that liquidity's been eaten up, you're going to run into trouble doing that over time. You really will. So I'm glad you like that, Alexis, because that is definitely sort of words to live by there. How do you open those lines and how do you use them? Oh, that's a long story. Edit. Head on over to How to Trade and click on the Elite Trading Series and the Fibonacci Counterpunch, and you can see exactly how I run those. Or just check out some live streams every day, and we'll get that going. That's for sure. Let me see. I'm not sure. Edit. Allo USDT. I have no idea what that is. Professor, what do you predict for the Kiwi? All right, let's take a look at the Kiwi. Absolutely. Let's see. This is an interesting one. We'll hit the dollar CAD though before we go here today. So what would the trade be? Right here. 4-hour 920 EMA crossover right there. The 9 crossed under the 20. You got our coded signal set up. You sell it. Boom. Sell market. And there's your sell. A couple ways to manage this thing. Sell it. Come on. Computer's running a little slow today, right? Typically that happens when you have times of high volatility. So this would be interesting because what you could do, stop loss, you could put right above your candle there or above that, swing higher above that. Just depends on what kind of really trade you want to make. If you want to make a big one or a small one. For me, let's just throw it up there somewhere and look to take a position. We'll take a position, something like that. This would be definitely a swing trade. 4-hour chart, though, I really like the efficacy of this strategy on a 4-hour. Let's go for like a 1.5 to 1, which is very doable right there beneath 141. I mean, that's a pretty good trade. I don't hate it. So that's good. All right, Kiwi, let's see. Absolutely, Professor. Let's have a look at the Kiwi. All right, so we've got this big break here going on in gold. We'll see exactly where gold goes. The Kiwi, one of my favorites. Absolutely one of my favorites. 30-minute chart looks a lot like the gold chart, doesn't it? What I would be looking for here is just to back off to some longer time frames, potentially my daily. You can see we haven't looked at the Kiwi in a while. So, I mean, there you go. Fairly straightforward. 5, 4, 3, 2, 1. Where do the Fibonacci's go? Spike high right there. Work off of that spike low. That's like a magic trick. The high right there. 57.17, 57.16. Line in the sand, Professor, for this market, it's going to be 57.16. If you do break up above that zone and get established, you're probably going to creep higher, probably 57.50. And then you got a great sell up there at 57.75 if you want it. Bearish, no question about it. This daily bearish trend is still valid. That was the line in the sand, though, in the trade that you really wanted. The trade that you really wanted was that sell right there. And unfortunately, we can't see everything all the time. But the reason why this was a good trade is that the market structure is very clean. Right there is sort of your spike high. What's a spike? That's when it trades above the previous bar and above the subsequent bar. That's sort of what you'd call, a lot of folks would call that a liquidity sweep. I call it a spike. So you have a spike right there. Nice big sell-off. Beautiful trend beneath that lower Bollinger Band. Compression, compression, compression. Break. The break right up there to about 57.16. And now you came right back down to 57. That's strong. That's strong. That's really strong trade. So if you ask me, are you holding longs or shorts here? Shorts. Shorts. The reason why is the bearish trend is still very much intact. And you can see that line in the sand is a big deal. That's a big deal. We hit it. We rejected it. We're also beneath the 13-day EMA, which is right around 57.06. So 57 is going to be a big level. 57 to about 57.16, 57 and a quarter. That's probably where your topside resistance is going to dig in and remain valid for a long time. If it does not, if the market does break above that zone, maybe you get a daily close today up around 57 and a quarter. Then you have to start thinking that maybe we're going to creep higher up to 57 and a half, 57 and 3/4. The next trade for me would be this sell right up here. That would be pretty good. If you wanted to sell this again, you probably could and get away with it. It's going to take a lot to push this market above that level. That is definitely a big time zone and a big time key. So you're going to want to keep an eye on that in the Kiwi. Great market, though. I love the Kiwi. You're welcome, Julius. Let me see. Do you think gold's bullish trend will continue? You want to know what I honestly think? I'll just shoot you guys straight. I think that more than likely is going to come into play right down there. That's my opinion. I think that this formation right here on the 5-minute chart, and the reason why we're using a 5 minutes because it's NFP day, we had a tremendous amount of action. This is bullish still. Don't get me twisted. Don't get it twisted. Don't get me wrong. That's an uppercase P. That's bullish, right? The problem that you're going to run into here is that when we open in about 10 minutes, you will see a flood of volume into this market. The gold traders will take things to the next level, at least, for 10, 15, 20, 20, 30 minutes, something like that. So we're still above this 38% retracement, no question. That's bullish. But what is happening is we are starting to creep, and you're starting to see that negative creep happen where we're just rotating down a little bit. Let's go ahead and take this up and buy 95s. I feel more comfortable with that. We're starting to come down a little bit, and what that means is you're going to fill that chain in. There's a very good chance that you're going to fill this in. I like this down here. 62% has always been a friend of mine. So if I get that trade, I don't have a problem with it. But right now, you are starting to see that creep, and do we push higher on the open? I think that's anyone's guess. I really couldn't say. The fundamentals, today's NFP say we should, but will we? Who knows? Let me see. Darko, the move for gold is done now. I think the market is consolidating now. I tend to agree with you, Darko. I really do. I think that that's a great read. That's a sophisticated read. One of the first things not one of the first things I was taught, but one of the lessons that I learned when I was trading prop back in the day for one of the firms that's out there now is the gentleman that was running the active traders. Had a great thing. He used to call me out because I was always looking for breakouts. And he said, Vern, that was my call sign, my handle on the screen. They go, Vern, markets don't have to move. And I go, yeah, markets don't have to move. And as soon as I got that through my head, that markets don't have to move, my trading got a lot better because I started to really embrace rotational markets and understand consolidation, which is exactly what's happening here. So what's likely to happen in gold? If we consolidate the rest of the day, more than likely you're going to chop sideways down there. That'd be great. If that scenario unfolds, we're going to win. 62% will win. If we trend, if we blow the top off this thing and rally, well, then we rally. Nothing wrong. Let me see. Edit. Let me see. The worst thing is price hits your stop and then goes to your target. You ain't kidding, Professor. You ain't kidding. Can you teach us how to use these lines? Yeah, I've got all sorts of learning materials over at howtotrade.com. Head on over there. Click on subscribe. Get your free subscription. Reach out. Send me a private message. And I'll direct you towards the Elite Trading Series, which is in our Trading Academy. We have a lot of videos out. I made a comprehensive series on this years ago, and it's still there. And we've also done a lot of stuff on the YouTube channels over the years. Forex Signals TV is one of them. How to Trade Comms, another one. I put a lot of stuff on Fibonacci's out. So you check out some of those materials. That's the best way to get started. And then we do live workshops too. Maybe I'll schedule a Fibonacci, and I also trade them live. That's sort of what I do. I would say that's my approach. Can you see the Kiwi? I have a buy position. Well, that's okay. Kiwi's up. 56.97. 57's big for you. The fight will be between 57 and 57.15. That's the game for the Kiwi today. If you can't get through that, that's going to be really tough. Let me see, Packham. How should we trade the open on the NAS? Very carefully. Very carefully. All right. Let's go ahead and check out the NASDAQ and see exactly how bad business is over there. It was not good when we pulled the plug on it. All right, let's take this down to a 1 minute. I mean, this is sometimes taking losses is the best thing you can do. You want to win every trade, but that right there, if you're still holding longs, you're a dead duck. So what would I be looking to do here? Well, I mean, there's a couple of things that we can do, Packup, if you're interested in trading this thing on the open. Is this a trend? Nope. Why? Inside of the Bollinger Bands, rotating right around the moving average. It's not a trend. Is the sentiment bullish or bearish, though? Slightly bullish. Fundamentals are bullish. If you want to scalp, I wouldn't have any problem doing this. Spike high there, spike low. It's just not good enough. Excuse me. Allergy season. I mean, we could try to scalp right there from a Fibonacci 29,934. I don't love it though. I really don't. I think this is a really difficult time to be trading. I don't view that as being a trend because we're inside of the Bollinger Bands. This is a trend. That's a trend. Probably could sell 30,000 if you wanted to later in the day, maybe. I don't really have a problem with that. But as far as actually trading this thing, you know, there's a couple of things I always fall back on that show themselves over and over and over again. But the big picture is this. That right there is your NFP bar, and essentially it's a long-legged doji, maybe even an inverted hammer. We already traded outside of that range, and now we're rotating back up into that range. This is going to be a challenging open to trade. I probably would lay off it and wait probably 3 or 4 price bars. I'd probably come back later in the day and maybe look at my market profile stuff and see exactly where the volume distributions are. All right, our bell went off. We have a trade. There it is. Gold. There's your gold sell, right? 9 EMA strategy. Where would your profit target be? This is a 5-minute chart, so you go right here. You could play it really tight and attempt to get something like this going, which I think could be pretty good. That's a decent trade. You've got an opportunity potentially to trade maybe a 1.5 to 1 there if you wanted to keep your stop loss very tight. If you wanted to extend it, put your stop loss up above that swing high, then you can start maybe building for something like that. You could do that. It just really is dealer's choice. For me, let's just play this thing uber tight. And then you'd have something like this. That would be your trade. It's not a bad scalp. I mean, the market's really starting to come our way now. There's a nice big run. Going right down. Do you get filled up here, though? That's the question. Pretty good trade, though, so far. The 9 EMA, really good fill. Remember, the crux of this strategy is very simple. You get above 70. On the RSI, you're looking for a sell. You get a bar closed beneath your 9 EMA within 7 bars after you've been in that oversold territory, or overbought territory. Then you're looking to sell. So this stuff all shows up automatically. You get a nice alert. One of the problems that you run into, though, with this strategy, just plain and simple, if you're fighting trends, you're in trouble. So are we fighting a trend? I don't know if I would call that a trend. I would say this one has a legitimate chance of winning just because you can fill that chain in. Do we get the follow through? You can see we got a nice big bump down there, and now we're starting to rotate back to the top side. We'll go ahead and let that one simmer for a few minutes, but I'm not really in love with it. So as far as the NASDAQ 100, I would wait. I would wait until later in the day to trade these indices just because I would like to see how they digest things on the open. Jeanette, thanks. Great seeing you live. Yeah, would love a workshop on your Fibonacci. Yeah, we might get in there and do one next week. That's for sure. All right, guys, it's about time for me to sign off. I think we've been going plenty long enough. Let's see what the media coverage says for this set of jobs numbers. Well, here's the U.S. job creation cools in June with payrolls growth of just 57, unemployment rate at 4.2%. 2-year Treasury yields ease as light jobs report reduces Fed hike expectations. That's nonsense. So we're in a situation right there where it was a weak print. Media knows it. Everybody knows it. The question is, where do we go from here? Hard to say. Definitely hard to say. All right, everybody. That's a wrap for me today. I want to thank you for joining me for NFP Live. Remember, if you need a broker, head on over to switchmarkets.com. Check them out. Lots of bonuses, everything you need to get up and running there. As far as strategies go, we got the 9 EMA out there. The 920 EMA crossover is one of my favorites. A pretty darn good strategy. As far as Fibonacci's go, if you're interested, just tune into live streams, or I'll do a formal workshop if there's enough folks that ask. There's been a few, so perhaps I'll do a live Fibonacci retracement workshop next week. I will be out of the office tomorrow for the 4th of July holiday. So if you're in the United States and you're celebrating Independence Day, it's America's 250th, so it's a big deal. Have a great time. Get some hot dogs going. Maybe have a few pints if you're of age. Don't drive. Be safe with whatever you're doing. If you're playing with fireworks, be safe. Maybe go take a ball game in or something like that. That's great. Just celebrate and enjoy the time. Get away from the markets. That's what I plan on doing. We'll be back next week with a full slate of live streams starting Monday, Tuesday, Wednesday, Thursday, Friday, and I'll have that schedule up probably in the next hour or so over in the How to Trade trading room at howtotrade.com. Remember, subscriptions are free. Feel free to subscribe. Reach out to me. You can send me private messages over there. I reply to each and every one of them, although sometimes it does get hectic. There are a lot of them, so feel free to come on over and send me a message. If you have any questions at all, be sure to ask. And also check out our Trading Academy. There's a lot of good stuff in there. If you're looking for a strategy, all the resources that we've put out over the internet over the past several years should be able to line you up with a strategy. That's for sure. That's for sure. All right, everybody. That's a wrap. Riverleg, great to see you, River. You have a fantastic day as well. Always a pleasure to see some of the veteran traders, the folks that have been in this business a long time. Absolutely good stuff. Very, very pleased. We still come around every now and then. That's good. All right, Bobby Bob. Thank you, Coach. Have a fantastic weekend, and we'll see you next week. Absolutely. I couldn't have said it better myself. All right, guys, that's a wrap. The U.S. Open's 1 minute away. Trade it with caution. Remember, whipsaw trading is usually the rule. It's not the exception when it comes to NFP day. Right there, we're seeing, okay, gold's opening kind of flat. Now you're starting to get the rally. Now you're getting compression. Whatever you do, watch your risk. All right, everybody, have a fantastic trading session, trading week. Enjoy the Independence Day holiday here if you're in the United States. And as always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone.